Sysco, ticker SYY, trading at $73.19, is a dividend king that has been increasing their dividend payout year over year over the past 50 years. And over the past month, they are down by 2.10%, and over the past 6 months, they are down by 14%. Now, if we have a look at the 5-year chart, we can see that pre-pandemic, the stock was trading at about $80 a share, about $7 higher than what it is currently trading at. Now, if we jump over to the monthly full, we can see that over the past 50 years, Sysco has returned more than 30,000% to its investors compared to the 2,800% return by the S&P 500, which just shows its through-the-roof performance. Now, if we scroll further down, it is clear that we are slowly recovering from the pandemic, meaning that people are starting to eat out again, schools are holding their classes, and hospitality industries are slowly recovering, allowing Sysco to return to its healthy pre-COVID state again, which is also why TIP ranks as a 17.35% upside for SYY, predicting a price of $85.89 by the end of 2023, with 8 buy ratings, 1 hold rating, and 0 sell ratings. Now, to analyze Sysco in a bit more depth, we will jump over to my fully automatic spreadsheets, where we will have a look at the 9-pillar analysis and calculate the intrinsic value using the Graham's formula revised, discounted cash flow model, multiples valuation model, and the dividend discount model, where all these models will lead to our ultimate valuation at the end of the video. Also, if you find these spreadsheets helpful and interesting, you can download them at my Patreon at the link in the description. With that, if we return to the stock screener and plug in the ticker SYY, you can see that all the metrics show up automatically. And right away we can see the dividend yield of 2.73%, a very usual dividend yield for dividend kings, with a dividend payout of $2 per share per year and a trailing payout ratio of 81%, which is generally quite higher than I like to see, but as Sysco is not in a very innovative field, dividends is a great way to use up their excess free cash flow. They also have an institutional ownership of 86% and a beta of 1.11, meaning that you won't see as much volatility with Sysco as you would with the overall market. Now, if we direct our attention up here, we can see that the total assets and total liabilities of Sysco are both sitting at very similar values, leaving a total equity value of only $1.4 billion, which is slightly concerning, but I will get into that further into the video. Now, if we jump to the 9-pillar analysis, right away we can see that the current rating for Sysco is sitting at 6 out of 9, with a very decent revenue, free cash flow, and net income growth rate. We can also see that the 5-year profit margin is sitting at 18.5%. We can also see that there is a decrease in shares outstanding, meaning that Sysco is buying back shares at this very nice discount price compared to what they have been trading in the past. Now, if we have a look at the price to free cash flow and the 5-year PE ratio, they are both sitting above the values that we generally like to see. But if we scroll down to the financials, we can see that the average pre-pandemic PE ratio for Sysco was sitting at about 25, and only through the pandemic the PE ratio skyrocketed, but since then it was coming down steadily, reaching a value of 24 in 2022. Now, to return to the matter of the very high payout ratio, if we scroll back up, we can see that the long-term liabilities over the 5-year free cash flow negative dividends is sitting at 4.60, which means that with their historical free cash flow, Sysco would be capable of paying off all their long-term liabilities in about 20 years, while of course paying out a healthy dividend. Now, this combined with the high payout ratio might lead to Sysco to not being able to sustain their very nice 7% year-over-year dividend growth rate. But now let's jump to calculating the intrinsic value of Sysco, first using the Graham's formula revised. To calculate the intrinsic value, we will take the earnings per share, which we will multiply by the average yield on A corporation bonds, and the sum of the base PE and the multiple of the 5-year growth estimate and the growth rate multiplier, to get an intrinsic value of $75.40, about 3% higher than the current trading price. Now we can jump to our next valuation model, which is the discounted cash flow valuation model. As we can see, the free cash flow over the past 10 years is plugged in automatically, giving us an average growth rate of 6.26%. Now, based on this average growth rate, I calculated the future growth rate of 6% and plugged in an initial growth number of 1.4 billion, which is slightly higher than the 2022 free cash flow, as I do believe that through the year 2023, the free cash flow will grow by more than 6%. Now, using the projected growth rate value, I calculated the future free cash flow for Sysco, and using the discount rate sitting at 7.6%, I calculated the present value of that future free cash flow. I then summed up the present value of that future free cash flow, added any cash and cash equivalents, subtracted total debt, and get an equity value of 26,000, which I divided by the shares outstanding and got an intrinsic value of $51.36, about $22 lower than the current trading price, showing that historically Sysco's free cash flow would be slightly underperforming. Now we can move to our third valuation model, which is the multiples valuation model, which is based on comparing a company to other companies which operate in the same sector and have very similar structures. So this time I will be comparing SYY to USFD and PFGC. I took these companies' current stock prices and divided by their current earnings per share to get their price to EPS. I then averaged out those prices to EPS and multiplied that average by the earnings per share of SYY to get an intrinsic value of $88.86, quite higher than the current trading price by about $10, which shows that SYY might be slightly undervalued compared to other firms which operate in the same sector. But now we can move to our final valuation model, the dividend discount model. Here we plug in the dividend payout over the past 5 years and calculate the average growth rate to be at 7% annually. Now I do project a future dividend growth rate of only 5.5% due to the high payout ratio and the very high long-term liabilities of the 5-year free cash flow negative dividends. I also plug in a yearly dividend frequency of 4 as SYY does pay out its dividends quarterly. I then take the projected growth rate and calculate the next year's dividend to be at $2.07. I then take the next year's dividend and divide by the WACC negative the projected growth rate to get an intrinsic value of $97.88, about $24 higher than the current trading price. Now we can move to our ultimate valuation model, where we average out the Graham's formula, multiples valuation, discounted cash flow valuation, and the dividend discount model to arrive at an ultimate intrinsic value of $78.37, about 7% higher than the current trading price. Now if we plug in a margin of safety of 15%, the general margin of safety I generally like to go with, will get an acceptable buy price at $66.62. Now as Sysco is the leading company in their current field, I do believe that they should be trading at a slight premium. Therefore I will plug in a margin of safety of say only 8%, which would give us an acceptable buy price at $72.10, about $1 lower than the current trading price. Personally, I do believe that Sysco will go up in price and will keep steadily rising over the next many years, which makes it a great investment for that passive growing dividend income. With that, if you enjoyed the video, make sure to leave a like and consider subscribing if you want to see more valuations like this.